All right, so whiskey investment, that's what we're diving into today. And this one is interesting to say the least. You've been looking into this lately, and frankly, so have I. I mean, who doesn't want to own, little piece of liquid history that might just appreciate in value at the same time? And the source that you sent over, well, let's just say it adds a whole extra layer of intrigue here. We're talking about a YouTube video, but it's in Spanish. But don't worry, you don't need to brush up on your high school Spanish or dig out those old Rosetta Stone CDs. That's what we're here for.
Consider this your shortcut. We're going to
Yeah.
break down all the key details and insights from this video, no matter how many linguistic hoops it jumps through.
Exactly. So to set the stage, this video is all about a recent email from Whisky Invest Direct. And as you know, that's a platform where you can buy and sell shares of whiskey casks. And this email was about one particular sale that really caught people's attention. The whiskey in question, a little something called Klein Gables. Distilled back in 2014, but get this, it only became available on the platform in late 2017. And this sale, it wasn't your typical listing. Apparently, some anonymous buyer swooped in and made what they call a bulk purchase of this Klein Gables, meaning they bought a huge chunk, like a huge each chunk of the available stock. And they did it at a premium, which means they were paying above the listed price.
Yeah, and what's fascinating here is what that signals about this particular whiskey. You see, Klein Gables, it's not just any whiskey. It's a product of the Glengyle Distillery, which was actually mothballed for decades and only recently brought back to life. This distillery, it already has a cult following among whiskey enthusiasts, and Klein Gables, with its unique flavor profile, well, it's become a real collector's item. So this bulk sale, it really underscores that desirability. Someone was willing to pay a premium to secure a large quantity of it.
Okay, that makes sense. But for those of us who maybe aren't total whiskey connoisseurs, could you break down how a platform like Whisky Invest Direct actually works? Like, how do you actually invest in a cask of whiskey?
Well, it's actually a pretty straightforward concept. Essentially, you're buying shares of a cask. So let's say a cask is valued at, say, $10,000. Now, the platform might divide that into 1,000 shares, each worth $10. You could buy, say, 100 shares, making you a part owner of that cask. Now, as the whiskey in the cask matures, its value hopefully appreciates. And when it's time to sell, either as individual bottles or in bulk to a blender or bottler, the profits are distributed among the shareholders. Of course, there are platform fees involved, but that's the general idea.
So it's not like I need a giant seller and a team of security guards to get in on this action.
No, not at all. That's part of what makes these platforms interesting. They've made whiskey investment way more accessible to, a much wider range of people.
And speaking of accessible, the video goes on to talk about the returns from this Klein Gables sale, which I'm guessing is what kind of caught your eye in the first place, right?
You could say that. The numbers are definitely attention-grabbing. According to the video, investors who'd been holding onto this Klein Gables for around 13 months, well, they saw a net return of 13.3% after fees. And that was just by participating in this bulk sale.
13.3% in just over a year. Okay, now I'm really listening.
And that's just the net return.
Yeah.
The bulk sale price itself, that represented a 20.8% gross profit before even factoring in any platform fees.
Wow. Okay, those are some impressive figures. No wonder this wholesale has got people buzzing. But what does this tell us about, whiskey investment in general? Is this kind of return typical, or are we looking at like a one-off, a fluke?
Right. Well, it's important to remember every whiskey is different. And, past performance, it doesn't guarantee future results. But what this sale does do is it really highlights the potential for, significant returns. And in a pretty short time frame, especially when you have such strong demand for a particular whiskey like this.
So it's all about kind of finding those hidden gems, those whiskeys that are poised for a big jump in value.
Yeah. In a way, yes. But it's not just about luck here. Savvy investors, they look at a whole bunch of factors. Things like, the distillery's reputation, how old and rare the whiskey is, even what are the emerging trends in the market.
So it's kind of like art collecting in a way, but with better taste tests, right?
Right. There's definitely a parallel there. Both of them are considered tangible assets, right? That's something you can actually hold and in this case, even consume eventually.
Yeah.
Which adds, another whole layer of appeal for a lot of investors.
And speaking of appeal, the video mentions that over 96% of the Klein Gables investors on the platform, they actually took part in this sale. That's a pretty clear sign that people are, feeling pretty good about this type of investment.
Oh, absolutely. And it reflects, a broader trend that we're seeing right now in the investment world. There's a growing interest in alternative assets. Traditional stocks and bonds, They can be volatile, especially during times like these when the economy is uncertain. And people are looking for ways to diversify their portfolios. They want assets that behave a bit differently.
And that's where something like whiskey comes in. It's a tangible asset. It's got a track record of strong returns, especially for those aged and rare expressions.
Exactly. Whiskey, it's a finite resource, right?
Yeah.
Once a cask is bottled, that's it. You can't make any more. Especially when you're talking about these limited releases or, whiskeys from distilleries that have since closed down.
Which brings us back to that whole supply and demand thing, right? As the global demand for whiskey keeps going up, especially in these emerging markets, the supply of those like really sought after bottles and casks, it's only going to shrink.
Exactly. And that's the theory. And we've seen that happen time and time again in the whiskey market. Of course, no investment is without its risks.
Right. There's always a flip side. So for those of us who are maybe thinking about dipping our toes into that whiskey investment pool, what are some of the potential downsides?
Well, for one, it's a relatively illiquid asset, especially compared to something like stocks, which you can buy or sell instantly with, a few clicks. And then there are things like storage costs, insurance, and there's always the risk of damage or, even theft. Although platforms like Whisky Invest Direct, they do help mitigate some of these risks for you.
And then, of course, there's always that temptation to actually drink your investment, which probably wouldn't be great for your portfolio's bottom line.
Right. That's always a risk,
Yeah.
especially when you're talking about it, particularly, enticing single malt.
Okay, but on that note, the video does mention something kind of interesting. It talks about this potential to drink your returns, or at least like a portion of them. I'll admit that part had me a little puzzled. So you're saying there's a chance I could actually crack open a bottle of my whiskey investment, enjoy it, and it still be, a smart financial move.
Well, with platforms like Whisky Invest Direct, you actually can sell your whiskey back to the market, even before it's bottled. They essentially act as the middleman, making it easy for investors to buy and sell these cask shares among themselves.
So it's like a secondary market, kind of like trading stocks, but with a bit more, flavor to it.
Exactly. It gives you options. You could, for example, sell a portion of your holdings to, say, buy a bottle for yourself to enjoy, while you let the rest of your investment keep growing.
So theoretically, I could celebrate a successful sale on Whisky Invest Direct with a glass of that Klein Gables we were talking about.
Precisely, you'd be drinking your returns, so to speak. But of course, you always have to remember things like taxes and any capital gains from that sale, just like with any other investment.
Right, always got to keep those tax folks happy. But it's pretty cool to think that what starts as a purely financial investment could actually end up with you owning a bottle of, some rare aged whiskey that you can actually open up and enjoy.
It definitely adds a tangible element to the whole investment process.
Absolutely. It's not just numbers on a screen anymore. It's about owning a piece of history, craftsmanship, a story, and hey, maybe even getting to take a sip of that story down the road.
Exactly. And for those who are truly passionate about whiskey, I think that connection makes all the difference.
Well, there you have it. A deep dive into the world of whiskey investment, and all thanks to a Spanish YouTube video, no less.
We went from breaking down bulk sales to exploring how cask ownership works, all while figuring out why this whole alternative asset class is becoming so popular.
And for anyone listening who's feeling inspired, remember, always do your research, understand the risks, and maybe even sample a dram or two along the way.
After all, part of what makes whiskey so special is the enjoyment it brings, whether you're a seasoned investor or just starting out.
Couldn't agree more. Cheers to that. Until next time, keep exploring, and remember, knowledge, much like a good bottle of whiskey, is always best shared.